Millions of brokers trust Coalition to help protect their clients from cyber risk. Why? Because we built active cyber insurance from the ground up with data and security insights no one else can offer. Let's take a look under the hood to see Coalition's breakthrough technology that makes it all possible. We start the underwriting process with just your client's web domain. While many carriers typically rely on generic outsourced data, our approach is purposely built for insurance to provide deeper, more intelligent insights about a company's digital risk profile. Coalition is able to collect rich, comprehensive data on all the systems, software, networks, and vendors your client is connected to. We also go on the offense by pulling in information from hacker forums and proprietary data sources to anticipate risks before anyone else. We even set up virtual decoys known as honeypots to study how attackers exploit vulnerabilities so we can help policyholders detect and protect against emerging threats. By leveraging our granular data, AI, and machine learning, we're able to create a more holistic picture of your client's unique digital risk that we use to better predict their likelihood of experiencing a cyber incident. This corresponds with the price we charge, allowing us to offer faster, more accurate quotes. It also means clients with better controls often receive more favorable pricing. And our active insurance approach doesn't end once a policy has bound. We use this same cybersecurity technology and data to continually monitor and help protect our clients throughout the life of their policy. When we identify a new risk, we immediately alert you and your client through Coalition Control, our cyber risk management platform. Designed to be simple to understand and use, Control helps policyholders stay ahead of threat actors with step-by-step guidance and on-demand security support. We've helped companies remediate over 47,000 critical security vulnerabilities and counting. Active cyber insurance means Coalition policyholders experience 64% fewer claims than the industry average. Experience the power of active cyber insurance and start quoting Coalition today.
All right. Start quoting today.
Let's do it. Josh, it's great to be here with you.
Yeah, great to be here with you.
Coalition obviously has gone from a startup to one of the most definitive and successful cybersecurity insurance companies. And I think the audience probably here wants to hear a very quick version of the story, like how have we gotten from there to here, and what makes you guys different.
Yeah, absolutely. I think if you look at the league tables, we're now the third largest underwriter of cyber insurance globally. Even though we're only in the US, Canada, the UK, and recently Australia. And our biggest competitors are massive insurance companies, Chubb, AIG, probably the two biggest. And I'd credit a lot of our success to just taking a very different approach to insurance. And that's this concept of active insurance that we mentioned. And I think of it a bit like the analogy of a watch and a smartwatch, right? It's like you can buy a traditional insurance product from your grandfather's insurance company, but all you do is put it on a shelf. It delivers no value to you, unless, of course, something bad happens, right? And then, of course, it can be immensely valuable. But, of course, then take a smartwatch. It can do all the same things that a watch can do, but it has this incredible amount of computational power and internet connectivity that allows it to do things you would have never imagined a watch could do, right? Like notify the emergency services if you have a hard fall or check your blood oxygen level. In a similar way, we've attached an incredible amount of computational power and internet connectivity to a financial service, insurance, that allows us to do things you would never imagine your insurance company could do, right? Tell you there's malware in your network, you haven't patched this particular vulnerability, you've misconfigured something, whatever the case may be. And people are just blown away when they hear from their insurance company notifying them of a breach, as an example. And so it's just a radically different value proposition, and it's designed to reduce the frequency and severity of claims in the first place. I'd credit the other real success is that we're 911 for our customers, right? Because if you're a business owner and you're the victim of a crime, normally you would call the police. If you're the victim of a cyber crime, as we all know, there's just not much the police can do for you. And so we've vertically integrated the instant response services that businesses need to restore themselves operationally, which they often care about even more than just getting the financial compensation. We do that all together. So Between those two things, yeah, we started selling insurance 6 years ago. We now have over 180,000 customers of all sizes, small businesses, publicly traded corporations. I think we have a pretty stunning market share of like every professional sports league. And of course, we're a very large provider of cybersecurity services and tools as well.
I want to just, as they say, zoom in on something that you just glossed over a little bit, which is that you guys really are sort of a full stack provider of cybersecurity services, as well as an insurance layer. So I think for some of the folks in the audience who may not be familiar with what that actually means, I'd love to just dig in a little bit more and just go through, because you've really bundled a bunch of things that other companies consider like a main line of effort.
Yeah, 100%. I mean, the idea is to be like a solution for a business, particularly a small business, for cybersecurity, full stop. And the first start of that is sort of realizing that cybersecurity is not a technology problem, it's a risk management problem. And like every other risk you have, you can accept the risk. It's on your own balance sheet, like you're responsible for your recovery. You can mitigate it. And of course, there's lots of cybersecurity companies that help you down that mitigation curve, but it's a curve. It's a diminishing returns curve. It's not a linear line that goes to zero, which is a fancy way of saying you can't eliminate cyber risk, no matter how much you invest in technology. But you can transfer whatever remaining risk you have to someone else, and that's the domain of insurance. And the math is very simple. Whatever you haven't transferred or mitigated, you have accepted. And so the goal of our company is to make sure that you only you know how much you're accepting and you can survive that, which many businesses can't. Now, we didn't want to do just the insurance piece, which we do. Like, right, we give the financial service. That's what we lead with. We also want to help with that mitigation curve. And so we're not a replacement for every other cybersecurity vendor that people have, but I see ourselves as a complement. So every policyholder gets access to a full-blown cyber risk management platform that's pointing out the issues that they have, the things that they need to address. It provides partner solutions, that do things that we don't do, as like one coherent, comprehensive package. And then, God forbid, something does happen to them, we have all the services they need to help recover, get their business restored, and obviously make them financially whole. So it is a pretty coherent solution. You can also just use the software product without buying insurance. And so we have a lot of customers that are in markets where we're not licensed as an insurance company, and you can use those as well. But the DNA is very much that of a tech company. Probably 40% of our staff are software engineers, even though we have all the other things you'd expect an insurance company to have, an actuarial team, a claims team, and the like.
And when it comes to those additional services that you provide, obviously there's a bunch of cybersecurity investors and entrepreneurs here. How do you think about picking partners to bring into that envelope?
Yeah, I mean, for us, the North Star is just economic loss, right? And I think the magical thing we have that very few cybersecurity companies have are the dollars and cents to match up with the zeros and ones, right? So, you could go to a third-party risk management thing and they'll give you some random score, but the score is effectively a hypothesis, right, of what you should do. Everything we do is like what leads to financial loss because we see them. Like we have a claim filed every hour on a 24/7, 365 schedule. We have a tremendous amount of economic data that can tell us or help us inform our customers how much a control will reduce their risk, right? Or how much a loss would cost them. And so when we prioritize vendors to work with or initiatives, the North Star is like, how do we reduce the economic loss that our customers suffer? So we prioritize those solutions that do that. And so perhaps, unsurprisingly, things like very effective controls like multi-factor authentication, different zero trust technologies that basically allow people to take remote network access off the public internet. These are all things we're going to push, but it's also sector dependent, right? So we have a lot of manufacturers, as an example. There's companies like your own that focus on OT security, and those may be solutions that we emphasize for manufacturing firms because actually I think we're the only cyber insurer globally that will provide coverage for property damage, bodily injury, and even pollution liability resulting from a computer security failure. So think of like a physical cyber attack, which I know your role as the head of cyber in the National Security Council, you saw a lot of that sort of stuff. We cover those things. And so for those businesses that have that exposure, we may recommend an entirely different set of solutions.
And so that's an interesting incentive alignment that is sort of off-center from the traditional insurance industry, which has traditionally been seen as adversarial in some cases with their customers, where it sounds like you're really trying to align those incentives because, ultimately their loss is your loss, and so buying down that risk is one that, sort of drives the technology development at Coalition. Yeah. I think this is an interesting opportunity to ask a question about what you're seeing as an insurer, because in many cases, Coalition is likely one of the first eyeballs on emergent tactics, techniques, procedures that adversaries are using. So in that position as the CEO and founder of Coalition, what are the things that you're seeing that you think the rest of us are going to hear about over the next 12 to 18 months?
Yeah, I mean, I'd love to say that we see all sorts of new novel techniques, and I'm sure every once in a while we do, but to be honest, it's almost like same thing, different day. Hackers operate from tried and true playbooks. They do the same thing over and over and over. They don't need to be novel, right? There's so many victims out there, so many folks who have vulnerabilities of one sort or another, that we just sort of see the same playbook run. Maybe it's a different type of exploit. This week it's ConnectWise. The next week it's some SonicWall product. Hopefully these vendors aren't in the audience, but both have threatened to sue me before. So we're very open about which vendors we like and don't like. And the ones we don't like, it's nothing personal. It's if you lead to financial loss for us and you have awful products, we'll call you out on it. And that's part of our job. But there's not really actually much that's novel. I'd say if you look on a frequency basis, unsurprisingly, business email compromise is by far the highest frequency event we see, although the severity is not super high. Ransomware would be probably the third highest frequency, but it's the highest severity by far. And again, they're targeting open RDP ports. They're targeting vulnerabilities with known exploits that allow for remote access. So there's not a ton. The thing that worries the insurance industry isn't the things that are happening idiosyncratically to one company or another. It's the things that happen in the aggregate. And I think we're going to see more and more of that as both companies that are digitizing, they're becoming dependent on a smaller number of vendors. I think hackers are beginning to realize that that's where there's a lot of leverage. So take what's happening right now with Change Healthcare. It just blows my mind that this is not more in the media than it is. I mean, people cannot get prescription drugs. Hospitals cannot determine eligibility. They can't get paid.
Sorry, Josh is talking about an active incident that's happening right now with a major provider of prescription drugs across the United States.
Yeah, they're sort of, think of them as sort of like a clearinghouse. They're in the supply chain. No one's ever heard of them, but they're the ones that enable a pharmacy to determine what's the cost and to get compensated for that. They've been hit by a ransomware gang, a Russian ransomware gang, and it's been pretty devastating for a lot of businesses. For us alone, we have over 70 claims resulting from this one event, even though we don't actually insure Change Healthcare. And so those are the things that are more worrying for us. I mean, 70 is not a big number in the grand scheme of insurance. The industry is set up to cover events that cost literally tens of billions of dollars. But that's the types of things that we're thinking through. And I think some of these supply chain things are going to become bigger and bigger.
I want to just highlight something that I think you and I both know, having been longtime practitioners and participants in this field and market, but perhaps some folks in the audience may not understand, which is that you mentioned that this current incident is a Russian ransomware gang. And then we've made some allusions to some other large incidents. But I think the audience might really benefit if you wanted to break down that there, in fact, are different types of actors, malicious actors, in that cyber domain that are affecting attacks. So,
for sure.
Yeah.
Yeah, for sure. I mean, obviously, of course, you have the nation-state actors, the majority of which I think are more motivated by espionage than they are by some sort of financial or physical destruction. So we don't see too much of them in our ecosystem because espionage is not a covered financial loss, if you will, typically. And we can get into what cyber insurance covers. North Korea is, of course, the one exception because they use, of course, cyber as a means to fund the regime, and so they are economically motivated. They target crypto exchanges. They have campaigns to defraud companies out of significant amounts of money, and so we'll come up across them. most of the actors that we confront as an insurance industry and the economy writ large are criminal gangs. And in many countries, there's maybe a gray area between the nation and the gang, as you're undoubtedly familiar with in your time in the White House. But those are the ones we come up against the most, these ransomware gangs. And we see them a lot. The other thing is it's like Adam Smith, The Wealth of Nations, the crime version, where these groups have figured out like divisions of labor. So you oftentimes have multiple criminal groups that may be in entirely different countries that are effectively collaborating. One is doing initial access, another one is doing ransomware or the like. And we do try and help on efforts of attribution. We do try and help government in terms of understanding like the magnitude of the problem and who's causing the most trouble. But of course, attribution is not any part of the cyber insurance industry, despite I think some there's like maybe a misconception that we don't cover nation-state acts. Like we absolutely do all the time. I mean, NotPetya was I think the first big event covered by the cyber insurance industry. There were a couple high-profile denials, but these were actually companies that were trying to file a claim on their property insurance policy. And so unsurprisingly, the property insurance policy said no. But the cyber insurance industry has broadly covered all these events, irrespective of whether the actor is nation-state or the 600-pound hacker in the basement.
Yeah. Yeah, I think it's a great point, especially this moonlighting aspect that you've highlighted, and especially how the North Koreans essentially operate a dual hat practice. But just to sort of highlight that issue, because I think the popular conception, at least in the cyber industry, is that there's been this very large nation-state exclusion. I'd love for you to just go through that with a little more fine-tooth comb for the audience so that they understand the sort of topology of the cyber insurance market today with regards to major events.
Yeah, sure. I mean, without trying to bore people, but every insurance policy has a war exclusion, right? I mean, that's the domain of nation states. Like private insurance companies, can't be expected to be the, lender of last resort or the backstop, if you will, in that instance. In cyber is no different. So there is a war exclusion. But then the question is like, what is cyber war? The exclusion, I've never seen it in the cyber insurance industry ever exercised. And in fact, there's even a carve back to that exclusion where we affirmatively cover acts of cyber terrorism, even if they are state-sponsored acts of cyber terrorism. So from my perspective, every single state-sponsored event that's led to some sort of financial or economic loss that we cover as an industry has been covered. The only times in which companies have tried to exercise a war exclusion is when they're writing the property policy. And so what happened is for some of these huge NotPetya claims like Merck or Mondelez or whatnot, they didn't buy cyber insurance. They bought a property insurance policy, but it had really broad wording. And so they tried to ram it into that coverage, and they went in the back and forth with their carriers trying to figure out whether it was there or not. Clearly the intention was not. The carriers tried to exclude it on the basis that it was an act of war because Tom Bossert got up there and said that it was the Russians. But
it was the Russians.
But none of those, I mean, it didn't hold up, right? They were ultimately forced to pay. More recently, where this controversy has come back up again, is that the London insurance market, Lloyd's of London, has tried to implement a new war exclusion language that tries to increase the clarity of what's covered and what's not. And so what they tried to say is like, look, if a cyber attack against, like let's say you're a policyholder in the United States, the only time Lloyd's will exclude it is if the cyber attack is so devastating to the United States that the US government ceases to function or ceases to be able to defend itself. They can't, critical infrastructure failures. That's the only time that it would apply. But meanwhile, all the journalists covered as cyber insurance excludes war. It's like, it's a pretty high bar for even Lloyd's to try and exercise it. But of course, our wording is even broader. So practically speaking, the only thing you need to take away from this is that cyber insurance policies do in fact cover state-sponsored acts. I mean, even things that I believe, unless the US government comes out and outright says this was an act of war, I don't think you'll see anyone excluding claims that involve a nation-state actor.
That's good, because certainly the media was out there, 24/7
Always.
in the cyber world,
Yes.
talking about how, essentially it was over. So apparently we're back.
Insurance is complex.
As the
yes.
kid says, yeah, that's great. Well, I think maybe to close this out, we've got 5 minutes left. I'd love to explore how you guys are thinking about buying down risk in the future. Obviously, Coalition has really pioneered this strategy of a full stack cyber insurance model. And so as you think about like building the company and what comes next, what are the key aspects of growth and technology that you're looking at for the future?
Yeah, I mean, look, we're approaching upwards of $1 billion a year in premium, and so we have pretty substantial market share globally, even though we kind of really focus on the SMB, kind of going up into the middle market. And so I think you'll see us continue to grow at the pace of the industry, if not more. We've been taking share every year, and so I think for the next 10 years, the expectation is that the market grows by 20 to 30%. We expect to grow faster than that. So there's just a tremendous amount of compounding ahead of us. There's a global opportunity, and so we've already started expanding globally. And in a partnership with Allianz, we expect to launch across all of continental Europe over the coming years. So there's a lot happening on the international front. We have a security business that's growing. So we recently announced the offering of a managed detection and response service. So it's like, hey, not only will we insure you, we'll actually take responsibility for all of the security for you as a company, which of course gives us a tremendous amount of data, and we can also tie that into the insurance product where you actually get discounts if you use this solution. And like you said, all of our incentives are aligned. I think that's the most compelling thing. We're arguably the only cybersecurity company that has aligned incentives with our customers. We can offer insurance policies of up to $15 million per company. So we have 15 million reasons to try to protect that business and prevent it from failing. And if it does, like we're ultimately the ones that are on the hook financially, north of the deductible or whatnot. So I think international expansion is a big piece. We'll continue to retain more and more risk over time. So, we are licensed in all 50 states. We're a full stack insurance company, but we still work a lot with reinsurers, given just how big the amount of risk we're taking and how much capital is needed in some of these events. So we'll continue to increase that, and I suspect in the next couple of years we'll think about taking the company public as well in that pursuit.
That's great. And as you sort of think back on the 6+ year journey of starting Coalition and growing it to this really prominent position within the insurance market, what advice do you have for some folks in the audience who may be starting their own companies or thinking about it in terms of how did you think through and come to the conclusion or the insight? What would you tell the next generation?
Yeah, I mean, it's like find a problem that you're passionate about and find a problem like where there's a significant need. In our case, it was this realization that, hey, we're in the early innings of the fourth industrial revolution, which is digital transformation. Like every business is becoming a digital business. Even manufacturing businesses are becoming digital businesses. And while there's all the wonderful things that come along with that, there's all these new risks. And we tried to rethink like what are the biggest risks that these businesses have, and are their needs being met? And in the case of insurance, it was pretty obvious it wasn't. Like I've never worked in an insurance company before, and yet now I run a rather large one. And so I think a beginner's mindset is also useful. Figuring out how to actually, we were ignorant enough to even just try it out, right? Like, we weren't burdened by all the, garbage in the insurance industry about how things had to be done and how they had to work. And so we could just approach the problem in a different way. Now, we still had to collaborate and work with incumbent insurance providers, but even they were, they were keen to be able to deploy capital in a smarter, more intelligent way. So I'd say, beginner's mindset, like customer obsession, like focus on a problem and like rigorously measure whether you're actually, achieving it. In our case, the nice thing is like we have claims and we can see the rest of the market has claims. Like legitimately, we have 64% fewer claims than the US cyber market in terms of our frequency. Like objectively, you are less likely to have something bad happen to you if you're our customer. That's either just because we're better at selecting the good ones or also because we're helping them throughout the period. But either way, the fact that our customers know that if they can qualify and buy insurance from us, they're just less likely to have something bad happen to them, I think is that is the entirety of our success.
Well, sage advice from a very successful member of the cyber community. Let's thank Josh for coming and sharing this with us.
Appreciate it. Thank you all. All right.